Staying then with the subject of mining, we're joined by PWC South Africa's Vuyiswa Khutlang. Vuyiswa, good evening to you. Thanks for your time. An interesting review, of course, that you've done into the mining sector. It's absolutely unbelievable that this industry that over the last couple of years through COVID has sort of been this shining star. And today we're talking about such significant losses that, you know, it makes some of the profits over, let's say, some of, you know, the last couple of years seem surreal. It's like they never happened.
Yeah, Kathy, I think we've entered an era now where the commodity prices have gone down, specifically for the companies that we analyze in the publication, so your PGMs, operators, your iron ore, most of them are the companies in the basket that we look at, which are the listed entities above a 300 million market cap. We've seen a decline in prices and therefore a decline in revenue.
It's been, you know, one of the things that, of course, has also been heartbreaking to see, Vuyiswa, is just what the impact on productivity that many of these companies have suffered simply because of the challenges that we're facing in the country. So we're talking about load shedding, we're talking about rail. That has really seems to have led to a quick deterioration of this issue around productivity.
And definitely, Kathy, because, you know, there's so much production you can have, for instance, with railing. You know, there is so much space that you have on your mine to store your inventory. So for the coal operators, then you sit with another risk, right? So you will then reduce your production so that you don't sit with a lot of stock at the mine sites. So it's one of the sad stories when you look at the income statement of these mining companies, that on the one hand you've got the commodity prices, which really they cannot do much to change, and then there are factors that we as a country can influence, and some of those, load shedding, where now you have to stop production or reduce production, stop your manufacturing, have played a role in that number.
Let's talk about then what needs to happen going forward, because interestingly enough, the title of your report is South African Mining, Adapt to Thrive. So what are some of the adaptations that need to take place under this environment?
You know, one of the things that the companies need to do is that they need to look and say, well, how long do I see this difficult period, right? And how will I be able to survive this difficult period? So that means looking at how you're producing, looking at your cost structure, and looking at your capex spend, for instance, and saying, well, is it, am I going to spend the way I had planned, or am I going to change it because now I've entered it into a difficult period? But also looking forward, right? Because for most of the mining companies, you can't just decide tomorrow that I'm going to go from producing 20,000 to now producing 50, you know. So when you delay your capex spend, it has an impact on the future. So it becomes important to sit and do proper planning and say, how will I survive? What do I think the future looks like, so that I ensure that I survive this period and I am in a good place in the future when commodity prices come up.
The
other reason why
Sure, go ahead.
The other reason why we were talking about Adapt to Thrive is the fact that now we're looking, and there's the whole discussion on these critical minerals that are important for the green technologies. And the fact that we've got these critical minerals in Southern Africa. So it's important now to start planning and say, how do we place ourselves for these critical minerals that have a high demand, that we know that a lot of studies have been done that showcase that there is a shortage, ensuring that South Africa is well placed to play in that market too.
So there could be South Africans watching tonight who are maybe thinking, not great news for the mining sector, so they lose out on some profits. But of course we know it's much bigger than that, especially given the kind of role that the additional profits, the official term would be the windfall from the mining boom, what that has done for the country's fiscus, and what that has contributed really to helping government fund programs that have benefited the poor in this country.
Definitely. I think, and it's something that people don't think about, to say that this has an impact on all of us, the mining companies are one of the biggest exporters, right? So that's how South Africa earns its forex, but the taxes also, they've been massive in the previous years, and those have played a role in being able to have all the grants that we have, that help South Africans, especially in this high unemployment environment. The other thing that a lot of us don't talk about is that some of these mining companies, in fact, a lot of these mining companies have, you find that employees have shares or have benefit also from the profitability of the company, or they've got trusts that are given the ability through these profits to be able to take on certain projects. So you'd have seen, for example, some of the mining companies, I can think top of my head, Thungela, where it was publishing huge dividends that went through to the employees also, through the share schemes that they had. So normal miners who go underground or who are working on their operations, and it's not just Thungela, it's a lot of mining companies where employees also benefit for these when there's huge profits. The other thing is when you enter a difficult period, and some companies look at that and look and say, well, do I need the number of people that I have? And that's another conversation, because we know in South Africa that an employed person usually is supporting a large number of people in their family or friends.
Let's then wrap it up here, Vuyiswa. Ultimately, you believe that this is an opportunity for the sector to begin having conversations not only with itself but also within the communities that it's based around, transitioning really from the dependency on mining, especially for those communities that, of course, are homes to very big mining entities.
Yeah, it's a very important conversation to be held, right? And not only with the communities, but with government also, because one, in the ideal world, you'd also want, for example, to be more exploration and more investment so that you extend the mine. So what can be done to have that process? So having that discussion, looking at the models and making a financially sound decision. The other is, well, if we say we're closing down mines, again, it's another discussion on rehabilitation, on reskilling people, on looking at the economies around these mining companies. And you'll have seen, and these communities around the mining companies are very dependent on what happens at the mine. So having that and those discussions, those plans, and executing them, because that takes a while, because there's a lot of people that are involved in this process.
All right, let's leave it there for tonight. Vuyiswa Khutlang is a partner, Energy Utilities and Resources, PWC Africa.